Welcome. I'm your host, Henri Arslanian, and welcome to this episode of the Future of Money podcast. Before we start, I want to say a big thank you to the 500,000 of you who follow my content each week. This podcast, The Future of Money, is now ranked in the top 5% of all podcasts globally on Spotify. Thousands of you from over 160 countries globally are tuning in each week. So massive thank you for all your support, really from the bottom of my heart. As all you loyal listeners know, my goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments you are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of money and the future of finance. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados and discuss some of these topics. My guest today is an ex-colleague at PwC, Mr. Robert Materazzi, who's now the CEO of Lukka. One thing, by the way, you didn't know about Robert is that he used to be previously, before his PwC and before his Lukka days, he was a Super Cobra instructor pilot in the Marine Corps. So here we go. A lot of paths lead us in the crypto world. Rob, great to have you with us today.
Yeah, thanks for having me, Henry. It's a pleasure.
So Rob, today, I think for the benefit of our audience, I want to really discuss a lot the importance of data in crypto. What is the role that data plays in the evolution of crypto, and why it is essential to have proper quality data, as we try to build the future of institutional digital assets. But before we do that, do you mind sharing with the audience a bit of your personal background? You have a very interesting background. Love to share a bit about your background, how you got into crypto, and then we'll talk about Lukka and then the importance of data.
Happy to. So as you mentioned, I started off my career out of college joining the Marine Corps and was a Super Cobra pilot for about 9 years. Was part of a military transition program going into PwC. And so hired there at a really interesting time when a lot of consultants were helping with all the post-financial crisis regulatory compliance that all the banks and financial institutions had to deal with, which was a great opportunity to learn about the importance of risk management. And that very quickly got into a lot of the operational and technology risk management that ended up becoming an expertise of mine. And that knowledge was one of the big reasons why I ended up joining Lukka, which was my first time entering the crypto industry. And that was in 2018, not into a CEO role. So I was joined as our head of customer success and wore several other hats, kind of a true startup journey at the beginning, until I was asked to be a first co-CEO in 2020, and then have been CEO since then.
Amazing. And can you share more about Lukka? What is Lukka, and what does Lukka do in the digital assets ecosystem?
So when I was looking at Lukka the first time it was introduced, and it was formerly called Libra, we changed our name in 2019. They were building software that managed the data for fund administrators that were responding to all of the demand of crypto funds that formed following the ICO boom in 2016, 2017 timeframe. And there was an appreciation for the importance of auditability. And so ultimately, how do we know that the data is complete and accurate, that the calculations are done correctly, and that all the other right processes and controls are in place in order to have confidence in a net asset value calculation, which is the primary metric for any fund in the world. And that was really the birth of a lot of our other products today. And it started off with requiring a very deep understanding of data and the importance of institutional quality data, which in a very innovative and rapidly growing industry like the crypto or digital assets industry, and particularly at that time, there were a lot of things missing, whether they're formal standards or approved methodologies. We're still missing a lot of the regulation and the tax code and everything that we probably need in order to do this responsibly. Back then, we were at the very forefront of that, and it set the stage for a lot of the products that we have today, which is now very robust enterprise data management, where we're mixing a lot of data together to do fintech or any financial data management processes. And then we also have a very robust suite of data products, whether it's pricing related, reference data, analytical or other quantitative purposes, but all centered around ultimately the trades and transactions that happen within the crypto ecosystem.
So on that point, maybe to make it more practical, can you maybe share an example with our listeners? So first, let's take the example of fund administration, for example. So what is the importance or the role that like the data that you provide in the process of fund administration? As we know, every fund, for example, needs to strike a NAV at the end of the month and give this to investors. What is the role and what are some of the challenges that you're seeing in providing that data and when it comes to the valuation of those assets?
So when we're servicing them specifically in more layman's terms, your average crypto fund or even crypto portfolio, so not even just funds, they usually have to interact with a lot more marketplaces than they would have to in traditional markets. And it's because they get different prices, they get different assets, they have different strategies, different product offerings. And it's this huge menu of things that you can get, whether it's derivatives trading and you're looking for options, you're looking for spot trades or NFTs or whatever it is. And because there's so many different options out there, combined with a lack of formal standards, so even for things as simple as ticker symbols, it creates a lot more data and a lot messier data than we would traditionally have to manipulate. And it requires a lot of other very intelligent and mature data products to make it all work. And so what we're doing is collecting it from anywhere we need to collect it from, on-chain, off-chain, internal databases, really anywhere that we can get it from. We normalize it. So we fixed all the ticker symbols, the date timestamp formats and everything. So now it's all uniform. And then from there, we can value it, we can reconcile it, and we're doing more traditional financial data management processes. We can put risk models, we can support compliance processes on top of it, and so on, all to get to whatever final report of clean, usable data at the end. On average, to give you some numbers, I mean, I'd say your average mature crypto fund is trading with usually at least 10 liquidity providers. Very often we see some that are trading over 30 or 50 if they're very large. And that's representing maybe 600 or so different assets in a very large complex portfolio. So 600 assets times the, let's say 30 liquidity providers, and everybody's using potentially different ticker symbols among many other elements. It becomes a lot more complicated than most realize. However, we have solutions for that, and that's really why Lukka exists today.
And two, I mean, obviously, I think you mentioned there's a lot of different venues, there's a lot of different tickers, there's no standardization, there's no normalization of data, which obviously makes it quite difficult. From all the challenges relating to data, what is the most difficult you find? Where is the area of data in crypto where there's the least normalization or it's the most difficult to capture?
Two things come to mind. So one is just education. So one of the biggest challenges is just people understanding that problem exists. Because if you're calling us up for a tax report or an NAV report and you don't know that there's all these complicated things that you need to do in advance of that, that can sometimes disrupt the conversation and cause some kind of shell shock in what they need to do and potentially how much commitment or money they need to spend to resolve those processes. But I think that, when we're looking at the actual data and what data is most complex, it's all the DeFi data. Centralized data, we have a lot of problems with as well, just in standards and consistency and quality. But there's a business to go talk to resolve it usually, whether they're responsive or not and where they're located might come into it. But usually there's another business that you can respond with. And we have relationships, and a lot of the big exchanges and OTC desk market makers are customers of Lukka. So we've got a great network to be able to provide feedback in both directions, which helps all of our mutual customers. But on DeFi, it gets tricky because there's not always that person to go to. There's not always a help desk. There's a lot more complicated, innovative data, like smart contract data and all the metadata that comes beyond just the transactions that exist on chain. And that it's challenging and it's constantly evolving. So, you map the smart contracts for Uniswap, SushiSwap, and 1inch. And then, the next month, a new type of a smart contract is the hot one that's out there, and more dexes follow it. Now we're mapping out to the other dexes and then beyond, and then getting into all the staking and the revenue, the liquidity pools and everything that comes behind it. The data is a bit trickier, and it takes more specific blockchain or Web3 expertise in order to build products on top of it.
Because it's a bit ironic because unlike centralized data you're getting from these exchanges, when it comes to DeFi, the data is publicly available. It's just that it's so complicated and changing that actually, I guess, what makes it difficult, right? It's not the availability of data the problem. It's bringing it together and adapting and being able to capture it.
It's cryptographic information, which is not designed for searchability. It actually contradicts searchability. So in order to make it searchable, when we're not utilizing the cryptographic aspect of it, we have to index it, usually in traditional databases, in order to just search off of it and get a list of transactions associated with a wallet address, for example. And in doing that, there's a lot of decisions that the technologists behind that have to make. So do I record all the ERC20 fields? Do I record only these 10 most predominant ones? Do I look into the smart contracts and so on? And now people think that you can go to just a public blockchain explorer and get all the information that you need, but it comes with a lot of risks, and it's usually not suitable for institutions to do official reporting like net asset value reports.
Yeah, absolutely. And I think this is going to be a very interesting challenge. I mean, what is the importance of data and clean data and accurate data for the crypto industry to become more institutionalized, especially in certain areas or like DeFi, where the data is available, potentially not packaged in a standardized or normalized way?
I mean, honestly, I think it's the foundation of everything in the ecosystem. There's nothing that we're doing now that isn't, or in the crypto industry, that doesn't involve technology in some way and doesn't create data in some regard. And that's not going to stop. I mean, that's the foundation for the whole ecosystem. And so if you don't appreciate that and recognize that you need to build a capability around data, it's going to make it much more challenging to do it. And that's what we do our best to enable our customers to have, is that capability. And so very often we have to do things in a custom way using our different components or capabilities that we've built, but we'll very frequently package them in a unique way for a specific customer based on their needs, because every business is a little different. Data flows through all business models a bit differently. There's a lot of common characteristics. And so we tried to build our solutions based on those common components. So then we can mix and match them in a more agile way for our customers. And so we have dedicated solution teams that do custom implementations and everything. And that's a normal course of business. That's a very important one, particularly when interacting with some of the very large and complex global, GSIFIs or other big banks that we support today.
Very interesting. One thing I want to ask you about is crypto accounting, right? And taxes even. Obviously, it's been very interesting since I've been in crypto like you for many years. And one of the biggest challenges I find the crypto industry has is how do you actually do crypto accounting? But also how do you then, obviously, taxes are based on the crypto accounting that is done. What do you think are the challenges that we still have today when it comes to crypto accounting and crypto taxes? And what is the role that data or better data can play in that regards?
So the good news is, honestly, most of the existing accounting principles still apply, right? I'd say very rarely do we see people question whether or not something is an asset when we're looking at a crypto portfolio or something that basic. 4 years ago, they were. I'd say 4 years ago, you got the kitchen sink of just every opinion you could imagine. Now, I do believe it's settled down a bit. Does not mean that we have all the answers that we need and all the rules and we've mapped anything by any means. There's a long way to go. But I think a lot of the very basic stuff, I mean, for example, you're holding a capital asset short term. Most countries are going to have a specific tax rate. You hold it long term, there's a different tax rate or something to that effect. All of those different principles still apply, right? You buy something and you sell it for more or less, there's going to be a net gain or loss. And in most countries, you're going to have to pay taxes on it. So crypto doesn't change that. And I think a lot of people often confuse some of these topics in thinking that we have to do something unique when we really don't. We just have to apply what we already know to crypto. But where we do see unique things are in categories like valuation processes. So how do we determine the fair market value of an actively traded asset? So one where we see a lot of volume and it's offered on usually multiple marketplaces in the crypto ecosystem. And how do we determine which one of those should represent a principal market, which time of day we should use to mark positions, because most accounting guidelines require a close of day. And then you have to use an executed price in contrast to a blend or a VWAP, because a lot of technologists usually go in that direction. They're like, oh, we'll do a VWAP, or oh, we'll take, the difference between bid and ask, or we hear, all these different methodologies that are logical for traders, but they break accounting rules. And so it's important that we understand the principles in all of the accounting guidelines, whether it's US GAAP or IFRS or local country accounting guidelines. And we decompose those, and we don't just blindly look at the rules, because a lot of the rules weren't written for crypto, but the principles should still apply in our opinion. And we've written white papers on this and developed a lot of products around it at Lukka. But that's where I think the conversations are needed and need to continue to happen. And we need to continue to challenge things that we're doing to make sure that we're being thoughtful and managing risk along the way. But thankfully, a big set of the things that we need to do as it relates to accounting can be done the same way that we've been doing them before, right? Like a conflict of interest is a conflict of interest. That, we would have seen very simple things like conflict of interest policies probably present some of the fraud cases we saw in crypto last year.
Yeah. No, absolutely. I think this is the interesting thing, like you mentioned, right? A lot of the principles are the same. We just need to think about it, how we put in crypto into it, right? I would argue the same applies in the broader compliance perspective as well, right? Compliance perspective or AML or sanction monitoring. It's the same principles, but actually we need to think in a different way how we put the crypto in those.
Yeah, you might need the data from somewhere more unique. It might be more challenging to get the data from that source. You might need to interpret it in a different way. Yeah. But the principles to avoid the conflict is still there, right? Yeah.
So we just discussed about risk. You mentioned how the risks are different potentially in crypto. From a risk management perspective, what are the risks that you're seeing are different in a digital asset space versus traditional finance? Is it operational risk? Is it technology risk? Is it data cleanness risk? Is it people's risk? Is it conflicts of interest you mentioned? What are the areas where you think there is a clear differentiation from a risk perspective that we need to focus on in digital assets versus traditional finance?
So first and foremost, it comes with all of the operational and technology risk, which is a big part of our products. So we're very deep on those topics and spend a lot of our own capital to ensure that we're putting in place proper risk governance as it relates to our operational procedures and technology, because those are the products that we offer. And like we mentioned, with all of this messy data, it makes the underlying technology risk associated with that higher, in short, and requires some different controls and techniques and procedures and capabilities in order to address them. But it's all still, it starts with the right intentions, which is having that in place. And then from there, there's never a perfect control environment, but a company's intentions to achieve it is what I think is needed, particularly when we're servicing big institutions and candidly, even consumers. I think a lot of the consumer products out there, it's maybe a tangent for this conversation, but there's definitely a lot less standards when it comes to consumer products, typically, other than privacy and consumer protection. But when it comes to the others, and I think that's a kind of a different problem. But once we sort out the data and the operational risk, then like most of our customers, they're trying to solve more maybe counterparty risk or compliance risk or other types of financial risk models, or VAR calculations, or whatever is applicable to their specific product offerings and business, and collateral limits, right? Proof of reserves we're seeing right now. I mean, that's a lot of arguably ops risk. All we're doing is aggregating balances. There's not a fancy risk model there. It's just saying, hey, we've got enough capital here to back our inventory, like we're advertising in our terms of use. But here's our proof on how we're doing it. Now, how they get that proof can be very challenging. We support a lot of companies with that use case, for example. That's a very unique one to crypto on how we achieve it, even though the concept of collateral isn't new, right? The concept of customer inventory and trade inventory is not new. Dealers have it around the world as part of the normal course of their businesses.
It's very interesting. I think, like you said, even I can tell you that being active in the crypto ecosystem, running businesses in it, the how you managing this risk is obviously very different, like you said, right? Like especially elements like tech risk, ops risk in particular. I think it's something that a lot of people underestimate how difficult it is compared to traditional finance. Rob, we're getting to the end of the show, but I want to really ask you, obviously, when we talk about data, how do you see the role and value of data, especially when it comes to crypto data, different in a Web2 ecosystem where we are today compared to Web3 ecosystem where we're heading? Do you think the value of data will increase, decrease, or its role or purpose will change?
Great question. I think first we need to figure out what Web3 means. And I mean, not me or you, but the world, because that's still evolving very, very rapidly, which is exciting. And we know that there's some core concepts of decentralization, that are baked into it. But as far as how data touches it, I mean, the entire Web3 world that I've heard people describe so far is sitting on top of a bunch of technology and data, ultimately. So I think it's very safe to assume that there's going to be even more data, that having data capabilities will continue to be more and more important in being able to interpret it. And I think it's also safe to say that there's going to be new types of data from what we have today, and we're going to have to figure out how to manage it to the same degree of maturity that we are with some of these legacy data sets. So I know that's some more general comments, but I definitely feel pretty strongly on those.
Yeah, and actually, one last question on that topic as well. Obviously, there's a big hype now around AI, generative AI, the Chat GPT and the likes. With the level of data increasing exponentially day by day in the crypto space, and obviously the usage of it that we're able to do is obviously increasing day by day as well. Chat GPT is a very good example. How do you see the future of the intersection between AI or generative AI or AI more broadly and data? And how do you think that's going to change the value we're putting on data or the use of data that we're using?
Yeah, it's a great question. I've been asked this one recently a couple times, actually. Down at Consensus was on a panel with that exact question, and it was we had some other panelists that were working on AI projects. I think the intersection is an obvious one. If we look at the core use case of blockchain, and a lot of companies we've seen historically have kind of over-engineered that and have tried to apply blockchain to things that it shouldn't be applied to. But the one very, very mature use case that we see in the crypto industry is to secure transactions between two counterparties. Like that just very, very basic thing. I mean, that's really the center of all blockchain. And obviously we're adding other data and we're having it do smart things for us with smart contracts and other more advanced protocols. But at its foundation, there's still always that transaction. In AI, right, that's a much bigger topic. And what we've seen so far is a lot of language model-based capabilities. And so financial data and language models, right, like I don't think they're quite ready, but we know we're seeing the updates happen, it seems like daily right now, on how all these capabilities, and I'm sure there's lots of great projects out there that are using it for all different things. I think that though, on top of it, it requires data again. So, I almost a running joke on this conversation, but it really is that basic. I think the whole garbage in, garbage out concept applies to the data that's going to be required for AI use cases as well. Would encourage innovators to do is to try to avoid applying use cases where they're not intended to be, and not to prevent innovation, but to maybe not waste people's time. And so, really look at what a particular technology is used, whether it's AI and it's what OpenAI has done, or whether it's blockchain and an individual protocol or their teams, and build off of it and really understand the intention behind the original use case, because often that gets lost after something's been around for years, or like blockchain now over a decade.
Very, very interesting, Rob, on that front. I think there's a lot of, even I remember not my last book, the book of crypto, the book before that, The Future of Finance. We spent a lot of time reflecting about the intersection of AI and crypto and fintech. And it's interesting because that topic now is back on top of the agenda, right? And in a way, we often discussed with my co-author in my last book that, we were maybe too early. But I think you're right. The role of data will play such a fundamental role, right? Obviously, that's what's powering a lot of the training that these AI systems are going through, right? So very, very interesting from that perspective and on it. Rob, we're already out of time. We have my famous bell is with me right now, and we're going to go through a fire round of questions. I'm going to ask you quick questions. I need a 1 or 2 word answer, and the bell is here to keep us honest on that perspective. Hope you're ready.
I'm ready.
Here we go. Rob, you spent many years in the military. What is the one thing you learned in the military that has stuck with you for the rest of your life?
Leadership.
Here you go. You're a pilot. What is the one favorite plane you would love to fly one day?
The Warthog A10.
Oh, here we go. I don't know which one it is, but I'm sure it's a pretty cool one.
Yeah.
Many of us have watched Top Gun. How good of a pilot is Tom Cruise? If you had to give him a grade from 1 to 10.
I don't think Tom Cruise knows how to fly.
He doesn't know how to fly.
And Tom Cruise, Maverick in the movie, sure. Not the actor.
Let's move to crypto. What excites you the more about the future of crypto?
She's just how it's going to change literally all businesses, no matter what industry, eventually, in not even the distant future, but I believe midterm, like inside.
Love it. If you had to be a betting man or a guessing man, who is Satoshi Nakamoto? Is it a man, female, or a group of people? And what country you think he or she or they are based in?
A group of people and decentralized.
Rob, if you're not in crypto, what other industry would you love to be in?
I think I would stay in fintech and definitely related to technology, maybe AI.
A student comes to you and asks for your advice. He's wondering between these 4 different job offers. One of them, join the military, maybe the Marines. Second, join a big 4, like PwC or former employer. Third, a startup. Or 4, the regulator. The Marines, a big 4, startup, or a regulator. Which one do you recommend he joins as his first job?
The military.
Why is that?
To build a foundation of leadership and problem solving and professionalism, because I think that applies to most veterans. But all of those, I would say all of the above is a nice, well-rounded career for sure.
There we go. What's your favorite book? If there's one book you recommend people to read, regardless of categories, or one book you recommend people to read, or magazine?
One that comes to mind, I don't know if I'd call it favorite, but the first one is Gates of Fire, which is about the Battle of Thermopylae and the Spartans.
Interesting. Very, very interesting.
Because of the leadership lessons that you hear in there. Yeah.
I love that. There's a team there, the leadership. I love it, Rob. And guys, to finish it up with Robert Materazzi, the CEO of Lukka. Rob, the traditional question on the Future of Money podcast. If you could have lunch or dinner with one person dead or alive, lunch or dinner with one person dead or alive, who would you have lunch or dinner with?
Right now, I guess Satoshi Nakamoto. Or the group.
Love it. Ladies and gentlemen, thank you very much, everybody, for listening. Again, this was another episode of the Future of Money podcast. Today was with Rob Materazzi, the CEO of Lukka. Rob, if people want to find you or learn more about you, where can they find you?
So the easiest way is through our company website, lukka.tech, or on all of our social profiles, which you can find on the website as well, including my LinkedIn.
Awesome. Well, thank you very much, everybody, for listening. Again, if you like the show, make sure to subscribe. And if you give us a lot of 5-star rating, it would really help more people discover the show. Thank you very much, everybody. And we'll be back soon for another episode of the Future of Money podcast. See you guys all soon.